So once again, good afternoon, everyone. We are starting this webinar on the Russia-Ukraine crisis and what's going on with the current markets. So friends, before we begin this session, what's going on in Ukraine right now and what's going on between Russia and Ukraine? This is nothing less than a huge humanitarian crisis. So our thoughts and prayers go out to all of those who are affected. People around the world, there are a lot of people from India, the students from India, they are stuck in Ukraine. And this is no doubt but a humanitarian crisis. So definitely our thoughts and prayers go to those people who are getting affected, and we certainly hope that things get better in the future. As financial consultants, we continue to do our job to ensure that there is sufficient market awareness about what is going on in the markets. And this session is solely dedicated to the idea where we are able to understand what's going on in the markets, which are the sectors you can look into, and how do you deal with the current scenario. What are the areas you need to be away from? What are the areas you can look into? So you can use your chat options to ask more and more questions. We'll try to answer that while we are doing the session or by the end of the session. If something I'm not able to answer, definitely a few team members from my team will reach you out personally via email or over the calls, and we'll have we can extend the discussion over there as well. And whatever we are going to discuss today, the fluctuations in the market, the volatility in the market is so high that only thing what analysts can do is predict. And it's not necessary that whatever I'm going to say is exactly what is going to happen. So that's not how financial market predictions would work. This is just one session to throw more and more information, understand and make investors aware of what's going on and what could possibly happen. So please make sure that do not take any of these insights as investment recommendations. Please talk to your risk experts first, understand your risk analysis, and only then go forward. Now, what was the scenario base when this year started, before this entire war started? The analysts all over the world expected a moderate growth rate. Inflation, few things which we are going to focus on today is also, apart from the war, another thing which has been very consistent right now and has been increasing is the increasing inflation all over the world. US inflation is almost 40 years high, around 7%, which led Federal Reserve announced 6 to 7 rate hikes over the year. And already markets were dealing with this particular news, and now this has happened. So the beginning of the year, mostly the expectation from this year was a moderate growth rate, high inflation, of course, and a tighter monetary regime. What do we mean by a tighter monetary regime? Means central banks all over the world were ready to increase the rates because of this spike in inflation, and the inflation spike has come with the rising energy prices. Oil prices have gone high, and then we have seen rising oil prices. Now, a combination of this is what was expected. Growth cycle was expected at a moderate pace, around 4% in 2022, which was 5.6% in 2021. Slightly weaker growth was expected in the first quarter. But again, high savings, strong trend in labor should have supported consumption. Global activity was expected to rebound. What I have done in my previous webinars, I've said in my previous webinars, thankfully, Omicron fears or COVID fears are now easing. So the global activity was expected to rebound. Inflation was still expected to remain high. Pressure from commodities. But what was expected was that probably inflation will slow down by the end of 2022 with rate hikes happening. Now, situation is slightly different than what the analysts expected. First of all, gold had a very bearish tilt, was expected to be on the downside, but now with Russia and Ukraine conflict happening, We have seen commodities rising a lot. We have seen a lot of agro commodities rising a lot. Energy-based commodities, precious metals have been going higher. So this is contributing to the increasing inflation as well. And let's also understand uh, what are the countries, which are the countries which are getting impacted to the Russia-Ukraine conflict. Like Europe is the most exposed area to this particular conflict, apart from Russia and Ukraine. US and China should face limited impact from the conflict, but still the high energy prices, high commodity prices still continue to remain um, the main areas in the trade industry. So the global trade is still expected to suffer. Now, this is something which everybody asks a lot of times, that what should we do in the conflict? And I want to make this session more crispier and more value for you. So let's try to understand how these regional conflicts, what is their impact, what is the historical impact, how S&P has moved. S&P is the US global benchmark, right? So it represents 500 companies in the US, and that kind of represents the entire stock market of US. Now, how S&P has moved through these past events, there has been Cuban Missile Crisis, there has been Iranian crisis, there has been bombing in Libya, first Gulf War, 9/11 attacks, the Ukraine conflict, which happened in 2014, the North Korean missile crisis. So if you see the red line which is there, on an average, S&P has still continued to go higher over the longer term period, right? If you see the median, so red line is the median, the average percentage which it has shown, the this has continued to go higher. Now that means that a lot of these events which happen, they come with a lot of buying opportunities also, but then we have to be very careful. Few things which we need to be very careful about, and these are the things which everybody talks about, but we always get panicked. So first thing foremost, what you need to understand is every volatility comes with the opportunity. Okay, but that doesn't mean that you go for higher leverage based investments. Leverage means using borrowed funds to invest, and that is something which, if you expand your leverage, it's a very high risk strategy. So in during the events like this, even if there are buying opportunities, you have to understand that leverage is something which you have to keep very much in control. Basically, do not take leverage at all during these situations. um, but yeah, wait for the opportunity, because with more and more fluctuations, you still get a lot of opportunities in different sectors. Another thing is, you definitely need to stay calm, because these are the exact situations where panic investors, they start selling their investments. Yes, if you had invested in a company which was a smaller market value company, not very strong financials, and continues to go down more than the actual market, then probably it's time to book their losses. But then if you have quality stocks, if you have companies which have shown profitability, which have shown good cash flow, which have strong fundamentals, and if they are down as per the market percentage, I feel that you have to stay calm. No need to stay panicked, considering that you have not taken any high leverage on the on those positions. So continue with the quality names. This is something which all of us have to understand, because at the end of the day, companies like Apple or Microsoft, for example, these are trillion-dollar companies. Always good to have these companies in the portfolio, but then not necessary that you have to increase too much leverage to buy them. If you have existing trades in these companies, if you have existing portfolio already, um, just make sure to stick with the quality names, the companies which have the history of showing profitability, or the companies which are giving you good dividends. Still continue to hold on to that. Do not get panic. Stay calm. I'm going to share the screen with you right now, and shows you a complete picture of how historically these events have happened, and what has been the average movement in the US stock markets. And please continue to ask any questions if you have. I'll be um, very happy if this becomes more and more interactive. So right here, let me share you this flyer right now. Um, you can ignore the caption. It says "Be greedy when others are fearful." That was a quote sent by Warren Buffett, but um, no need to be greedy at the moment. But yeah, let's try to understand how the markets have performed back in the past when such kind of conflicts have come. And this information is easily available if you talk to your relationship managers or the person who has connected you to the webinar. This information is readily available. You can always ask for this and more understanding. So, if we see, first of all, the current market scenario, what the market has been looking like, because this is the one of the most important things we have to understand. The Eurozone, the banks in Eurozone has almost shed 4.5% as compared to the previous month of February. The weekly loss in banks is around, in the European banks especially, is around 15%. If you see S&P 500, it is kind of trading in a range of 40 to 60 to 4400. There was a slight break above 4400, but turned out to be a fake breakout. um, if you are trading right now to increase the safety of that particular trade, if there is a breakout above 4400, then please wait for at least half an hour or 1 hour to see whether the breakout is correct or just a fake one that goes up and comes down. So that is something which is really important, unless there is a breakout which is above 4470 or 4480, because that is where the 200-day moving average is. That will be considered as the break of the downtrend, could be beginning of a fresh trend on the upside. So these levels are really important. And of course, volatility will continue because there are a lot of Western sanctions which are going on Russian oil. It's still a possibility, right? We'll also talk about what sanctions have been put on Russia, how much they're impacting it. Things will also take a turn if there are changes in the monetary policy front, because um, inflation is not easing. Oil prices are going up, inflation not easing. So there are a lot of thoughts around whether Federal Reserve will um, increase their pace of increasing the interest rates. So basically, increasing the interest rates means increasing the credit rate, which means the borrowing becomes expensive and it reduces the supply of money. And this time, Federal Reserve is full-fledged, um, available to reduce down the injected liquidity which started with the COVID. So the extra stimulus which was given due to the COVID, it did increase the inflation, and at the same time it has started increasing so high with the oil prices going up that now there's a need to cut down the supply of money and ensure that inflation cools down. So that is something which is the current news which we are going on with. If you see about gold also, reached around 1950 1951, and again, there has been a upside. If you see this particular upside, why it has happened, because the tensions between Russia and Ukraine, it has now intensified. Russia has attacked Europe's largest nuclear power station in Ukraine, and that I think that was the Zaporizhia nuclear power plant. And again, the people have started looking to safe havens, started investing in gold. So these kind of risk which is escalating right now, the attack on the nuclear plant, it has actually pushed gold prices also high. uh, Dollar also has been considered as a safe haven, and now dollar is also getting more and more stronger now. So these kind of things now are getting highlighted a lot. Along with this, something which investors, sometimes they don't look at those things, because so much noise and so much movement is going on around Russia and Ukraine. We are not looking at the other side of it, and that is the inflation part. Because with the inflation, that is something which is here to stay. And when we see, from the inflation point of view, even when Russia Ukraine cools down, and we will see after Russia Ukraine war cools down, we'll see inflation again becoming the theme of the whole particular year. So if you're looking at the jobs data, if you're looking at the labor and employment data of US, keep that data very handy and keep a check when non-farm payroll comes out, because if Fed has to increase the interest rates, it is important that enough jobs are being generated in the private sector, and that is what central banks be looking at, and that will affect the prices of gold and dollar and stocks as well. So do not just get distracted with what is going on between Russia and Ukraine, but give equal attention to the central bank as well, right? So we have started getting a lot of questions also over here, and we'll try to answer these questions as we speak, or once I finish my session, we'll definitely come and understand all these questions. Please continue to write your questions, so by the end we can answer this. Okay, now coming back to what we were discussing about. So every time the war and conflicts happen, it brings a lot of sudden crashes. And whenever we have seen historically in the past, the recovery of these crashes is kind of like it's very good and somewhat predictable also. It can always go wrong. As I said, that it's not necessary that what we predict is right. But as you look right now, what I'm going to show you, apparently, this is going to make a picture more clear. So um, just look at this. So the average total drawdown of S&P 500 was around 5.3%, with a maximum drawdown being 20% during the Pearl Harbor attack in 1941. Drawdown means the lowest point what it is seen. And the sell-offs have continued to hover around 3 weeks to reach a bottom. And if you continue to hold on to the index, so just look at this. This, I think, makes more sense right now. I hope everybody can see this. So this is the movement of S&P 500 index and the movement of the geopolitical events. So with line, as you can see, Iranian general killed in airstrike, Saudi Aramco drone strikes, North Korea missile crisis, bombing in Syria, Boston Marathon bombing, terrorist attacks, Iraq invasion. So we are looking at a specific degree of these attacks, and we see the date of the event, the total drawdown throughout that event, days to bottom. So if you see that there is no certain pattern in how many days the bottom has been reached, but an average has been created, and I would still feel that average is being created for 23 off days. So what we are talking about, the 3 weeks. But when you see return from the day of bottom to 3 months later, 6 months later, and 12 months later, you'll find out basically after 1 year, 12 months later, every major event which has occurred, if you see 12 months later, mostly on an average, S&P has ended up on a positive note, barring the 9/11 attacks in 11 September, and then Reagan shooting, which was in 81, and then Hungarian uprising, which was again in 1956. Barring those events, we have seen mostly S&P has ended up on an average of 14% increase. So if you see 3 month rise 8%, 6 month rise 10%, 12 months later 14%. On an average, over a long term, S&P continues to improve. So that is one thing which is really important. There is a question right now: which stock market is good to buy? See, very good question. The point is, we'll discuss more about which sectors to look at. Let's make it a sector wise. So definitely the area which you don't have to enter right now is Europe. Okay, I actually have a slide for this. Let's see before when we are answering this. Okay, so this was the crisis bit. I will discuss about the sanctions right now. And okay, so basically this is the last slide, but then this was the last slide. But let's discuss this while the question is already here. So US and Japanese equities you can still prefer. And as I say, prefer neutral, avoid. These are not any form of recommendations. Please talk to your risk experts before you take trades or take positions. This is just an insight, and it can definitely change depending on how worse this crisis can happen. So as much unfortunate it is for the people to get stuck in it and for the investors to get stuck in it, it continues to change depending on how intense this crisis become. As of now, we would still prefer US and Japanese equities to avoid most of the Asian economies, excluding Japan. Still look into emerging markets, but keep Asia away from it. Uh, See, one thing is the Chinese economy, the monetary policies in China are still very loose. They are not tightening it up. In fact, they're injecting more and more stimulus. So, and China suffered a lot as compared to 2020 and 2021. So, 2022 is where probably a lot of investors might be eyeing at China, looking at the recovery. So, you can look at that part. Definitely avoid Europe at this point because as of now, when we see this particular crisis, um, from a European point of view, we should always remember this is majorly a European crisis, right? And we have to understand that at this point, we definitely have to be away for a considerable period of time until this issue solves out, because it's mostly a European problem. The first order spillover effect is high energy and high commodity prices, right? Um, Again, it will still have a small drag on inflation and growth. It does adds to a lower growth outlook, and global equities will adjust to it. Um, as of now, the most affected areas in the European Union sector, airlines is one industry because of not only because of the whole crisis, but also the higher oil prices are impacting the airlines industry. So these are the most affected European Union sectors which you have to see. Airlines, then consumer staples. Normally, people would prefer consumer staples, but then because European Union sells a lot of consumer staples to Russia, the sale is too high, and that's why this sectors in European area, this sector is expected to get impacted because a lot of sales is done from EU sectors to the Russia. Then so these are the most effective ones, most affected sectors, the airlines and the consumer staples. And then there are a lot of other affected EU sectors also. Industrials are there, materials are there, auto parts. So as of now, from the European Union, right now the crisis is still at the western part of Ukraine. But if it goes eastern, where Romanian borders are there, um, that is where it becomes a bigger problem, because then it becomes a NATO issue. So we don't want that. I mean, definitely it should not go that way, but if it does, then it's a bigger problem. But the affected European Union sectors right now, the financials, auto parts, materials, industrials, the sectors which are expected to be a bit neutral, I think communication services, healthcare, I think these are the areas which you should still look at. Neutral EU sectors. First of all, not advised to go to your invest in Europe, but if you're doing it, the neutral sectors are this. Oil and gas probably will be a positive sector to look at if you're looking at European equities. So basically, be away from Europe, avoid it. But if you're looking at other sectors, this is the time to actually do sectoral investing. Look into communication, look into infotech, look into healthcare, financials, consumer discretionary. And when I say financials, I'm talking about US financials, JP Morgan, Bank of America, like those kind of stocks. Um, from the bond perspective, still look at high yielding bonds, avoid sovereign bonds, um, continue to have investment grades. Among alternative investments, there are a lot of private market investments going on in the telecom sector. So telecom sector is also one sector which has surprisingly has been the most talked about. So if you start looking at the telecom sector, especially companies like Vodafone, etc., you can look into the telecom area also. Uh, Gold and energy, real estate, investment trusts, these are few areas which are still expected to be neutral. See, gold is acting as a safe haven right now. The way things are going, possibly in a couple of more days, the gold prices are expected to be on the higher side. Um, and the reason being, let's look at this area over here. So these are some key areas where Russia and Ukraine are the major producers of these key commodities, right? So there is a supply chain disruption which is expected. Now look from the agriculture point of view. So ammonium nitrate, Russia accounts for 42% of global exports, and it is used as a crop fertilizer. Wheat, 21% of the global exports from Russia, and then 10% from Ukraine. Corn, 13% of global exports from Ukraine. Then look at the metals part of it. If you see palladium, platinum, so palladium is Russia accounts for 43% of global production in palladium. Platinum accounts for 14% of global. Aluminium, 6% of global supply. And you will be surprised to know aluminium prices have gone up 13 years high. Along with nickel, uh, it has gone up almost, I should say, nonetheless, 10 years high, the nickel prices. So these kind of metals are also getting affected. The supply disruptions are happening, and that is why the prices are continue to soar. So definitely would not advise you to short sell these, but yeah, these are the ones which are going up. We'll also use a live platform to show you that how the prices have moved when the crisis have started. Neon, Russia and Ukraine both account for 40 to 50% of global production, and neon is used in the semiconductor production. So as of now, the supply disruptions are causing the price of these metals going higher. So these are the ones which you should definitely look at. And going further, what has happened? Some of the obvious understandings, what's going on with the aerospace and the defense area. So you can always look at the ETFs which are related to aerospace and defense, because defense ETFs have jumped double digits since the invasion of the Ukraine. And if you see this whole military conflict, it is kind of spotlighting the geopolitical risk in general, and those funds which are supporting defense equipments, they have kind of got a top side to it. And there are a lot of if you see iShares, US Aerospace and Defense Fund, then there is SPDR Aerospace and Defense Fund, there is Invesco Aerospace, and everything is available on the platform, and you can always definitely see it. So I think this is something which is on the top, right? You're looking at the aerospace and defense ETFs, and Germany has started in creating, or they have actually started increasing their defense budget. So that is important. If you're looking at the European area, the defense companies could be one of those areas with which you can look into it, right? And then there are a lot of stocks. So defense stocks, I mean, there are companies like BAE Systems, for example. And most important, one area which very few people, I mean, it was highlighted a lot, but a lot of people overall they have neglected, is cybersecurity. I have done a lot of sessions back in the past. I see a lot of names which are repeated, a lot of people who have attended these some webinars before. We did an exclusive webinar, and we keep doing this as a part of thematic investing. And cybersecurity has been one theme which I think from last 2 years we have been talking about cybersecurity a lot, because with increase in cryptocurrency um, popularity, um, cryptos have been accepted as a mode of payment among the hackers, right? It's untraceable, it's much more used. And with that happening, the cyber crimes have increased, because it's very difficult to trace the criminals, because the payment which is done, it is done in cryptos, and cryptos are not traceable. So the increase in the cyber crimes, and then the increase in the government spending over cyber crime solutions, it has been a lot. And even now also with Russia and Ukraine, we have seen increase in the cyber security stocks also. So there has been a lot of sectoral updates about cyber security. Demand for cyber security has increased because the rise in cyber attacks in 2021, the cyber attacks increased by 68, and this is driving companies, governments to increase their investments in cybersecurity. With the invasion of Ukraine, also, so when the invasion of Ukraine started, a series of cyber attacks also started against the country's digital infrastructure. And again, as I said, that there's a lot of investment going on around the world in these cybersecurity companies. So we are going to look at the live platform, how you can invest into these cybersecurity companies and cybersecurity as a basket also. We were also talking about the a few names in the telecom era, and so on. I mean, I'm sure you have a notepad. You can always write it down. What's a few names, and you can talk to your risk experts and see what's going on with these companies. Vodafone, for example, these are few telecom companies which are not only giving you good dividends, but at this moment, a lot of people are talking about telecom stocks. So even the private investments have started happening in the telecom sector. And a lot of times we have seen that as compared to the defensive sectors, the consumer staples and consumer discretionaries, sorry, consumer staples mostly, telecoms have most of the time outperformed in these situations. So if you're looking at Vodafone, if you're looking at stocks like Deutsche Telekom, Telstra Corp, or China Mobile or China Telecom, uh, this particular sector, it has outperformed the broader market even year to date. If you see, markets still continue to seek after defensive companies with very stable business outlook. uh, but as of now, with the rising rate, it has increased the market volatility, and it is kind of favoring the telecom sector a lot, because telecom sector has actually good dividend yields. So in a rising or in an increasing interest rate market, anyways, a lot of people, they move from the technology stocks to dividend based companies, and a good dividend yielding company is preferred a lot. So a lot of these telecom companies are right now being talked about and discussed over. Okay, could you give us advice this time which stocks to? So I just talked about a few telecom sectors, right? And I even talked about aerospace and defense. Please, as I said, do not consider this as a complete recommendation. I mean, these are the areas I would be interested in, but please assess your risk, talk to your experts, look at the fundamental valuations of these companies, and only then go for it, because this is very important. And as I said in the beginning of this session, stick with the quality names. Stick with the companies which have a history of giving proper cash flow and a history of being profitable. Be away from the areas, from the small market value companies. Focus on those companies more which can withstand the losses, if any. So normally what happens is, whenever there is this kind of crisis, the small market value companies or the domestic companies are the ones which get affected the most. So uh, if you have invested in any of those companies and you see them going down more than the market rate, then please try to cut down your losses and move on to the quality names which are giving you fixed dividends and are reasonably valued as well. So that is something which you can look into. um, as of now, there are a lot of energy stocks which you can look at. See, energy prices have hit record high. Since this invasion has happened, if you see European gas prices, they have jumped almost 50%. Oil prices have hit 7 years high. It's almost $113, which when we checked on Wednesday. And right now, energy sector is a little tricky to see the direction. JP Morgan is talking about how oil prices can go to 185. I mean, not that it is going to 185, but this is the current sentiment in the market, which is kind of bullish as of now, if this matter escalates a lot. So if you're looking at energy stocks like Shell or British Petroleum, now those companies, while oil price goes high, um, you would think that these energy companies are good to invest, but then these are the energy companies which have major exposure to Russia also, right? And both of these companies, they are currently trying to exit their business in Russia. British Petroleum was it had a very high stake in a Russian company called Rosneft. So now they are selling their Rosneft stake. It is up for sale. It will still, like, it's not clear that what will be the financial hit on British Petroleum for this and how long it will take. But then the British Petroleum shares are still up 5%. And if you see the oil and gas energies companies, in general, they should get benefit from the increase in prices, right? So look at the energy area more, look at the oil companies more, look at the ones which are giving dividend, but then please look at those companies which have high exposure to Russia. Be away from those. Look at the overall impact. In general, increased energy prices should benefit the energy sector more. So I was showing you this particular sector, right, where you can, which areas to prefer. So communication, infotech, healthcare, which to avoid, utilities and consumer staples as of now, which markets to avoid, Europe mostly, because since we are looking at, think, yeah. Now look at the sanctions. So we were talking about what sanctions, the sanctions have also been hit, but mostly, so the gas pipeline, which came from Europe, Nord Stream 2, the gas pipeline has been suspended. If and because of the sanction, if you see the sovereign debt, um, the Russia's sovereign debt in US or European Union, that at this now is prohibited. So bank transactions, if you see a lot of foreign entities, Russia cannot do any kind of bank transaction with the foreign entities. The US has blocked two Russian banks, Web, which is involved in domestic development, and PSB, which is involved in the defense. European Union has also blocked two banks. UK has blocked five banks, right? And again, the other tranche of the sanctions, where SBR Bank, VTB, Novicon, all these kind of names, again, they are provided. So basically, a lot of sanctions are being put. Russian banks, a lot of Russian banks, they're excluded from the SWIFT transfers also, right? From the export part, a lot of US software technology equipments, there are restriction of the exports now. Nobody's exporting to Russia from that particular sector. Even I think if you look from the financial point of view, right now the Russian stock market is currently suspended. If you even want to invest into a ETF, which is indirectly giving you an exposure in Russia, you can't do that. So there has been investment restriction also. US has applied financing prohibitions, no new debt, and that is something which is, as of now, it is the Russian sanctions which we see. Um, the impact of all these sanctions on Russia is still limited, but if it continues to increase, then there could be a possibility that starts affecting, right? So there is a question here: how do you anticipate gold and oil to be affected with the increase in interest rates? So see, this is one important thing. As of now, when we talk about um, how gold is going to be impacted with the increase in interest rates in the beginning of the year, and that was so ending 2021, beginning 2022, it was pretty clear that gold is expected to have a very bearish, very downside outlook. And it's something this when because something this strong happens when central bank decides to increase interest rates, inflation was all time 40 years high, and a 50 basis points rate hike was on the table, and 6 to 7 times. And normally, this would put gold prices down, and we saw a bearish tilt in the gold prices in the very beginning. Now we have seen gold prices going higher because of the Russia-Ukraine crisis as a safe haven. Depends a lot how stretched this particular crisis is going to be. Once this is over and we enter into a market where Fed is ready to increase the rates and tighten its monetary policy, gold prices might uh, come down from their highs. So this is something which you have to be very careful and looking forward. In the coming few days, we don't see the crisis getting handled that easily. And possibly we might see a high increase. So nobody will tell you to short sell gold right now. But the overall understanding is once this crisis is over, which historically we have seen that all of these crises, they have a certain days of bottom and then recovery. So whenever this is over, the theme of the year will always be inflation and a higher one. And central banks, they are ready to increase rates, even Europe also. depends how worse this crisis go. Only then Europe will probably think to notch down the interest rate. But as of now, the global central banks, they wanted to increase the rates, right? So still having a bearish outlook once this crisis is over. But as of now, everybody is very bullish on gold, on the towards the upside because of the current crisis. Oil, as of now, see, oil is, with oil prices going up, uh, we have seen inflation going higher. So yes, I mean, not expecting once the crisis is over, probably $100 or $90 to $100 benchmark would have been what it would have been. But then this is because of the crisis we have seen increase in the oil prices. So as I'm saying that if you see the interest rate impact, it should be bearish for both the commodities. But as of now, because war situations are going on, that is the present, and that is what we have to focus on. So short term, you see gold and oil both prices going higher. Another question I see here: will there be a way of investing in Russian equities in the near future? See, as of now, markets are suspended. See, glad you asked this question also, because I'm going to take you to the live platform and show you some options how you can normally do that. And it is important because as of now, the trading is completely suspended, and it is something which we have to see how it's going to work. Let's just go forward to the live platform and see that how which are the areas we can look into, and how the movement in precious metals have been. So this is the live platform right here, trade room. So look at this. So there are platforms which are providing you exchange traded funds, ETFs, and then there was a question about Russian ADRs and GDRs also. So there's a fund which is providing the exposure in Russian ADRs as well. So if you click on it, look at the performance right now. So just look at this. This kind of answers the question also. The question was here, views on what will happen to the Russia GDRs and ADRs due to the sanctions, right? As of now, look at this chart, and this is the fund which is focusing on Russian ADRs and GDRs at this moment. And look at the fall. Probably my image is blocking. Let me just move this chart a bit. Right here. Okay, let me just, yeah, here. So I'll just increase it like this so my image doesn't block. Yeah, better. From a price of 180 to 100, this fund which focuses on Russian GDRs, it has come down to 26, the lowest right here. Let me increase the font size also, so you can see this clearly. And now these are tradable at the moment because obviously a lot of speculation going on. See this. This is the current price right now, and it fell from 180. It was going up, and now it has come down all the way to 25, 26. The only way as of now to invest in Russian equities would be through an ETF or through a fund. But that is not happening either because it is already suspended. None of the funds are working at this moment. So as of now, I think there is no other way you can invest into Russian equities. In fact, the US companies also, like oil companies which had stake in the Russian companies, they are also selling those stakes. So as of now, those doors are closed. But what you can look into is look into energy sector for investment. Look into oil companies which are giving you decent dividends. And also, is the right time to buy stock market today? See, as I said, every day, every time, it's a good opportunity to buy. I just showed you chart of S&P 500 that how after 3 months, 6 months, and eventually 12 months, the long-term returns are on the positive side because crises are temporary, right? Eventually, market recovers. So yeah, with every fall, there is a buying opportunity. You can always go for the stocks and buy, but please invest into the names which are quality names. So if you're looking at the financials point of view, you're concerned about rate hike, look into financials like JP Morgan, for example. JP Morgan even gave positive returns during the COVID, during the pandemic, right? So that is something which is there. Look with the quality names. Even now, if you see technology, normally technology stocks are kind of, as I said, not preferred in a rate hike environment, right? We always see people moving towards dividend yielding companies. But when we are looking at from the technology part, normally we have seen even in wartime scenario, it will always make sense to go for a consumer staple stock like supermarkets and food producing. But then right now, all of these companies, they are currently battling with a very high input cost because inflation is too high. So this is not a very normal situation like always. Normally during a wartime, you would stick to companies which are related to food producing, right? But because of high inflation, and it's a 30, 40 years high inflation, so their input cost is too high. So a lot of investors, they are investing into high quality telecom companies, as I said, Vodafone, Orange, etc., Deutsche Telekom. Then they're also investing into technology stocks like Microsoft, for example, right? From a tech space, it from a high of $340 came down to 296, right? So that is again something which you can look into. You can look into cybersecurity based companies, and not just because of the war perspective, cybersecurity. So let's see at how cybersecurity themes have gone up back in the past. So I'm just going to show you here. So there is a basket which you can always look into your platform, cybersecurity basket. Look at this. So last 10 months, look at last probably 1 month. See last 1 month, and needless to say, this is where the crisis is, right? Right from here. See, from one unit which was 5,300, it has gone all the way to 6,000. And this has the movement from 24th Feb current. If it goes worse, more worse, then there would be more and more demand for cybersecurity based companies. So, and let's see the overall return also. Look at this. So, from the longest perspective, let's see in last probably 2 years. See, last 2 years, how cybersecurity stocks have performed. Look at this. From 2,900 to 4,600 to 6,367, again came down to 54 and now back to 59. So basically, these kind of themes are still talked a lot about, and they are also investing a lot. So another question, what do you think to buy tech from US? See, just as I said, go with the bigger names. If you are looking forward to it, so there are a lot of companies like, so when you say technology, it does not always mean Facebook kind of company, because with Facebook, off lately there has been a lot of trouble with metaverse and everything. Yeah, if I would see it from a longer term perspective, it would not be a bad stock to look into it. But as of now, you need less volatility in your portfolio to stick with the popular names. As I said, telecom companies which are good. Look at Vodafone, as I said, right? You can look into companies like Vodafone. You can probably look at SoftBank. You can look at China Telecom. Those kind of companies, probably Microsoft kind of companies, Amazon kind of companies, right? But please do not take leverage over your positions. I don't think leverage is not something which you need at this moment. Do not go for any adventures, because this is the exact kind of thing which attracts investors during these situations when they see that stock markets have fallen. Please do not enter into it. There is something called a ladder portfolio which we created during the high inflation. Now, a lot of these companies probably, I think, due to the war situation, you might avoid. But if you're looking at a laddered approach, because ladder portfolio was created to ensure that if the market falls down due to inflation, then you can always start buying in tranches. You can start buying in ladders, right? So ladder portfolio was that. Let me show you a glimpse of what a ladder portfolio would like, what stocks would be included in that. Just 1 second right here. It's already open. So if you're looking from a tech stocks, right? Since you talked about the tech stocks, which stocks you can look at? I think right here. So I hope everybody can see this. So ladder portfolio is very simple. It talks about investing into different phases: phase one, phase two, phase three. Invest 40% of your capital in phase one when the markets are down, then phase two when it reaches to a support level, then phase three when it goes down further at another support level. From tech point of view, I think the most popular companies talked about, like we have kept Facebook away from this, but Adobe was one tech company which made a part of the ladder portfolio. Nvidia was another. Salesforce was another. Salesforce was one company which even during the pandemic it went did really good. And then Amazon.com, as we were talking about. And then look from a moderate point of view. If you're a moderate risk taker, not a very aggressive risk taker, financials like JP Morgan, Bank of America could make a lot of sense in a high interest rate environment, right? From energy stock, ExxonMobil could be probably a good idea. It's a dividend yielding stock. Starbucks is a dividend yielding stock. And then from a very conservative point, companies like Verizon Communications, Coca-Cola, Procter and Gamble, which gives you that kind of exposure, um, and gives you a dividend yield also. Okay, will be okay. I think we've answered this question already. So, what will happen to the Russian GDRs and ADRs due to the sanctions? See, depends on the intensity, right? And depends on the sector also, because we have to see which are these sectors. Because now, see, let's understand what's going on with the current market. Russian shares which are traded abroad. So basically, for those investors who don't know what a GDR or a ADR is, basically um, Russian companies listed in US stock markets, right? Now, Russian companies which are listed in other forms, again, even those stocks have started coming down because of there has been a panic selling, right? So that is something which is we have to understand. If you see UK and if you see US, the Russian stocks which are traded in UK, US, they have started coming down because of the sanctions. Some of them have gone almost worthless. So there is an index called MSCI index. Okay, it tracks the Russian stocks which are trading in London and New York, right? And that index has fallen down to 67% by the midday, and in UK. Like in US, it has come down by 67%. In UK, it is down by nearly 96% this year. So there are a lot of, like, I'm glad you asked this question because there are a lot of companies which are listed in London, Russian companies like uh, Bank, for example. Bank is Russia's biggest lender, and it has fallen more than 90% on Wednesday. Gazprom, which is a state-owned company, it has fallen down 85%. Novatech has gone down by 90%. So if you see this right now, the foreign investors, they are panicked. They're selling anything which is related to Russia, right? Lot of banks, they have stopped trading altogether. So as of now, not only Moscow index has been suspended, but companies in London, New York, the basically the depository receipts of the ADRs or DDRs we are talking about, um, that is also getting affected a lot, and investors are selling everything which is connected to Russia. There are so many brokers at this point in the industry which are just cutting their access to their clients to buy. Like they're not letting clients buy any Russian GDRs. They have just suspended their trading, right? Like Bank is trading at literally zero point 0.1 cents and it's not tradable, right? It's really incredible how it works. So this is a sharp decline in Russian stocks, and this is solely because of Western countries. They have launched, this is a barrage of sanctions on businesses, and basically these are businesses which are very close to the Russian president Putin. Talk about talk about companies like Severstal, for example. Now it's a Russian steel producer, okay, and on Wednesday the entire trading, the supplies which were going to Europe because of the sanctions, all those supplies were at halt, right? Bank has closed all operations in Europe. So when this is happening, people are just winding up their positions in Russian stocks. It's very confused. So as of now, I wouldn't be surprised if I feel that this is something which is very hard to recover. Uh, okay, I think there are a few questions. I'm just going to do the questions now. I think we have discussed more of it. Will there be a way of investing on Russia equities near future? Not until the trading suspension is removed. There is no other way. Could you also please share your views on automobile sector, Tesla and others? So, um, okay, I'm going to answer this question. I just want your views on which stocks to buy, someone where to start a new portfolio with a 3 to 5 year horizon. So, good question. See, if you're looking for a 3 to 5 year perspective, start at US financials first, because this is a rate hike era you are entering into, and Federal Reserve is very aggressive in wrapping up all these stimulus. So companies like JP Morgan are expected to make profit out of it. Bank of America expect to make profit out of it. So as of now, stick to the names which are giving you good dividends. From technology point of view, as I said, companies like Amazon, Microsoft, and Alphabet could be good areas to look into. But your most of the allocation should be towards value stocks, companies which gives you good dividends. Okay, following on to another question, you coil in a history. In history, what has happened in the past with ADS and GDS affected by sanctions? Is there any example of the past? See, it's good. Actually, it's a good observation. I can look into how it has affected solely the ADS and GDS. Definitely, let me look into it. I don't want to give you a vague answer. As of now, if you talked about Russian ADS and GDS, the levels at which it has come, a lot of clients are just winding up their positions. Even the funds are winding out their positions. So it's very difficult to talk about it right now. But as of now, I don't see any immediate recovery happening. Is there any way to invest and benefit in the increasing inflation? Yeah, definitely. So the sectors which you look at, apart from when inflation is going on, as of now, energy sector is really the sector which you should be looking at. Look into industrials more. And when I say industrial, I'm not talking about Russia, Ukraine, or Europe. I'm talking about US industrials area, right? The manufacturing area. Because why? When inflation increases, you buy equities to beat inflation, right? Nothing else is going to beat inflation the way equities does. So you buy, but the sectors which you should be looking at, that's those sectors should be related to communication, sectors related to energy, utility, materials, and industrial. Because what happens, the when there is an inflation, the prices of raw material increase, and that cost is passed on to the consumer eventually. So the prices of those sectors will increase, right? So when you are looking at inflation, you want to make your investment more profitable. You would look at those areas which will absorb the inflation and just pass on to probably to the consumer itself. So industrials and manufacturing and energy and utilities, those are the sectors you should be looking at as of now if you want to take benefit of the increasing inflation. So ladder portfolio is exactly for beating the like making sure that during the inflation you look into these companies. Dividend yielding, consumer defensive. And if you're looking from a tech point of view, Amazon, Adobe, companies like Boeing, for example. See, as of now, airlines is not a sector you should be looking at because of high oil prices. But future on, whenever there is a stability, it's a good recovery year for Boeing also. But again, this doesn't count as of what's going on right now. Can we get this webinar on YouTube? Sure, no problem. You can. This will be recorded and put over YouTube as well. So do not worry about it. Another question. I'm looking for another question. Guys, go. Go ahead. Just ask any questions you want. We'll try to make sure that all the questions are answered over here. I'm just trying more and more. There are a lot of questions about the portfolios and um, okay, okay. Um, can you give your view on cryptocurrencies? See, for cryptos, I would always say so. Um, we always thought see how vulnerable financials are to economy, right? Like US decided and there will be no swift transfer for Russia, sanctions being put. We thought cryptos will move higher on this news. Everybody thought that, right? Because cryptos were supposed to be meant for this. But now cryptos are not going high. They're almost valued in the same point. As of now, I should say that if you have investments in cryptos, you should stick to those cryptos which are major ones, your Bitcoins and Ethereums and Cardano from possibly. And that's the most important thing, right? So just try that you stick to the major names. And there are a lot of funds also which are as of now like Bitcoin ETF or Valkyrie Bitcoin mining ETFs. You can invest into those ETFs also if you don't want the direct exposure into the currency, or look at some stocks which are using blockchain. Like take an indirect exposure would make a lot of sense, right? So I think that is something which you should be looking at. There is another question right now: the viewpoint on healthcare and pharma sector funds or stocks. See, as of now, there are, see, healthcare sector and pharmaceuticals is still much needed, especially when we are talking about a war situation. We should definitely look at those kind of funds, and we should definitely look at those kind of companies also. Um, to be very specific, I think there should be specific names. So your Pfizer's and etc. is always good for dividend yielding, right? So you can always look at those companies from the dividend yielding perspective, because low volatility. Name. My name is Yogesh. Somebody just asked. My name is Yogesh, and you can see more webinars on this on YouTube as well. So when we are talking about healthcare and pharma sector, definitely in the idea like this, you can always look into more and more pharma companies, the well-established names. As I said, please continue to have investments in the well-established names rather than going with any other companies. That is really, really important. So apart from this, if you go with any other companies which are not profitable or which are smaller market value companies, then it is not. You can, so let me show you some ETFs which are available from the healthcare point of view. Just 1 second. I'll share the screen with you so you can see it here. So healthcare ETF. See the global healthcare ETF. This is iShares Global Healthcare ETF at this moment. This is a live account only, sorry. Okay, here. And then there is healthcare innovation, US healthcare ETF at this moment, if we see it's available. Yeah. So let's see in last 1 week, probably how it has gone up. This is last 7 days. Let's say last 1 month, not 3 months, last 1 month. See, last 1 month, this particular fund right here, this is iShares US Healthcare ETF, mostly focusing on US companies. From 261, it has gone to 278, pretty stable at this point. Will be a good idea, in fact, to invest with a fund and with a well-known like iShares or SPDR or something like that. So just continue doing that. Healthcare is definitely a sector to look at, especially in war type situations. Again, going back to the point when we were looking at which sectors to look at right here. See, communication, infotech, healthcare, financials, consumer discretionary. Um, among this, when I say communications, I'm looking at telecom companies, which I broadly told about that how a lot of telecom companies are being preferred and outperforming. Then looking at financials, talking about JP Morgans and Bank of America's, right? Some neutral areas like energy, as I said, still keep it in neutral because the impact of oil prices is mostly positive on the oil companies. So you can always look into those companies which have not much Russian exposure, mostly solely dedicated towards US. And then there are companies related to industrials and materials. So somebody asked about how we can take advantage of the inflation to invest into those kind of companies, right? Um, and as we talked about how you continue to avoid Europe, basically look into the aerospace and defense ETF, but from a US point of view, try to avoid the US ones, and that will be something which is most important. Um, Try to be away from African economies also, because Africa's relationship to this whole Ukraine war, Russia, like Ukraine Russia war, it is kind of complicated also. But as we see developments in this conflict, it will start impacting economies. And again, the most vulnerable are the ones who come, the economies like Africa. They're already, because Africa is already struggling to recover from the impacts of pandemic. There is a lot of climate crisis is also going on that is putting Africans into the poverty. The foreign relations with both Ukraine and Russia, it is definitely going to hit the continent, right? So basically, you have to understand how hard it is going to be for the African countries. And as of now, there are a lot of ways in which African countries, the relationship with the Eastern European nations, normally at war, it will impact the whole continent. And if you see from the economy point of view, that is something, again, you see the economy and you see the vulnerability of the citizens. Both these categories, they are very much connected. Because, first of all, let's talk about the imports, right? And then there is a national investment. South Africa, for example, has billions of dollars worth of investments in Russia. And Russia also has good chunk of investments in South Africa. So when you're looking at from economy point of view, this is one factor. From a citizen point of view, um, there are a lot of African students which are caught in the war in Ukraine. There is already a lot of discrimination and racism which is shown to Africans during this particular time in this particular ongoing war, right? And see, in case of food security, for example, Ukraine and Russia both are major exporters of oil, wheat, and corn, right? So this is also an area which Africa needs to worry about. Look at so these are some things which we have to understand before we invest into every economy, right? A lot of people would not think about whether I should invest into African index or not, but then you have to see these points before this happens. Because look at agricultural commodities. Nobody has asked a question right now for agricultural commodities. Russia and Ukraine, they collectively supply around 30% of the world's wheat. Ukraine is fourth largest supplier of wheat and corn, right? Let me show you, before we end this session, let me show you the impact on the wheat prices right here. Let me see if there are any questions. Yeah, just look at what's going on with the wheat here. I think a lot of investors miss this rally. Look at wheat. See wheat prices. This is just a it's V shape. It's like from 806 cents per bushel, it has gone to 1100, right? Look at corn prices right here. See, same chart, right? From 602 to 773, right? Look at gold prices, for example. More positive side. See, right? So, even from the agricultural point of view, there are a lot of agricultural commodities whose supply disruptions are happening, and it will be affected. Aluminium and nickel, for example, and even the semiconductors area. So look at some semiconductor companies right now. Look at the ETF, semiconductors. So let's take, semiconductor ETF, any. Look, because last 1 week, like, look, it has been going down because of the supply disruptions right here, right here. And metals like aluminum or nickel, they would contribute to the EV space also. So that is also something um, energy intensive, required in EV space, and supply disruptions comparatively makes aluminum and nickel a lot more precious than gold at this time. So look into those areas also. These are few sectors which we should look into. There's a question: how do you think it's time to buy Chinese stock Alibaba? See, China markets are recovering, and Alibaba has fallen down a lot. I mean, it does takes a lot of uh, boldness to invest into Chinese equities. But as of now, the price is at such a great discount that even if it recovers, it will give you profits. But take a very long term perspective. Take a very long term perspective when you invest into stocks like Alibaba. I would still feel Alibaba is a good stock, but as of now, if you continue, as I said, continue with the names which can withstand the losses if the crisis get worse, right? So Amazon is one of those companies which you can look into. Amazon is deriving around 15% of its revenue from the cloud computing segment, which is a very growing segment. So my choice would still be Amazon rather than Alibaba. So yeah, I mean, if you are going really long term perspective, that then that is one thing. Okay, I think there are a few more questions here. Should one invest through ETFs or direct stocks? See, when it comes to a theme like cybersecurity, take ETF. Healthcare, take ETF. Right? Aerospace, defense, take a fund. Not don't point out one company. When it comes to from a growth point of view, like technology, pick out specific stocks. Don't just go with the fund because Nasdaq has been coming down a lot as of now. So rather than that, I still feel if you're picking out a bit exotic areas like cybersecurity, take the whole fund better. If you are looking at something related to, for example, healthcare, for example, not only you can pick companies, but better you can go with aerospace and defense. Go with a fund. Always better to go with a fund because tomorrow, if the crisis becomes neutral or normal, then the company prices might consolidate, come down, right? But if it is a fund, the impact of that will be less on your portfolio. So be careful with that. ETFs, better way to go. Yeah, especially if does one doesn't have time to monitor stocks. I understand. Just go with the fund, less volatility. Pick the path towards less volatility. As an investor, your involvement is always needed. Doesn't matter how great your fund manager is, you should have the time to monitor it. So that is there. Few people have asked about valuations of stocks in the Indian market. See, valuations as of now, it's still very questionable. Everybody's questioning the current valuations of the stocks. Um, if you have SIPs going on into mutual funds, do not touch it. Just keep going it. Reassess your portfolio. As I said in the beginning, that if there are companies which are smaller market value companies, not very big names, and have fallen more than the market rate, it's time to book losses and get out and start investing into quality names. That is more, start investing into those names which have good fundamental valuations, right? Because there are a lot of mid cap companies also which were just up because of the normal market movement. So it doesn't make sense to invest in those at this point. Find safety in the frontline stocks, basically, right? Um, Good part will be to go with the ETFs, and I think that will be a better point. So I think volatility is good, but the only thing is that we have to be very careful because crisis in Ukraine is not the only thing you have to watch. You have to look at the interest rate hike. Oil prices going up is negative for India. So there could be more INR weakness. So before you send money, think about that as well. Um, so the Indian markets will have liquidity issues. LIC IPO is also coming. That is what 65,000 crores. So there will be a lot of shift from one sector to another. So be ready for that. The Central Bank of India has not increased the rates, but the way inflation is growing, it's only matter of time before this happens. Right. So okay, so I think we're done with the question. Somebody has asked about if we how we can see the demo account. You just talk to your RM. They will give you the demo account also. How fast we can start investing? you have to open an investments account for it. Again, talk to your RM. It will take a day or two. But please, before that, sit with your relationship manager, sit with your risk consultant, and only first understand how much money you want to invest. Look at your investment horizon, look at your risk appetite, and only then select sectors. Right. So before I end this session, any PDFs or any portfolios which I have discussed over here, if you talk to your relationship managers, they will give you this over WhatsApp or email, so you don't have to worry about those. Second thing, before we end this, on behalf of everyone, my team here at Century Financial, first of all, a big vote of thanks to anyone who's in the healthcare, pharmacy sector, doctors, nurses, first responders, midwives, who have risked their lives during the COVID situation. The impact of COVID now is less, but then still is there, and I'm really appreciate those who are there at the front line doing this noble work, and it can never be forgotten. And then our thoughts and prayers goes out to everyone who's getting affected due to Russia-Ukraine crisis. I sincerely hope that this crisis is over as soon as possible, and the casualties should be very, very less. But then only time will tell how this works out. Until then, please do not get panicked. Keep calm. Do not take high risk. Do not take decisions which you regret later. Talk to your risk experts before you invest anywhere, especially to the youngsters. One thing which I would like to say, because the Russia invasion of Ukraine, it has not only rattled the global markets, but then there are a lot of personal finances which are getting, people are getting worried about it, especially the youngsters. And if you see the cost, as I said, it has started rising because of the oil prices up, inflation is going higher. So the people who are aging 18 to 29, they might have some financial difficulties, right? Basically, starting of the pandemic was there. So just try to manage the fuel cost, right? Oil prices have driven higher, and I'm sure in different parts of the world, oil prices are going higher, even here also. So it has started going higher. Be very careful. It's a very small thing, but the driving style make a very big difference. You have to make sure that do not go crazy on your driving. Oil prices will continue to go high. And that being said, natural gas prices are also going higher. So you have to be very careful about it. Interest rates are going higher as well, but do not rely on high interest rates, okay? Because even if you put your money into a savings account, whatever interest comes out of it, inflation will be way higher than this. So even when interest rates go up, do not think that the money which you have kept in your savings account is going to give you a positive real return. So try to invest into different areas rather than keeping your money in the savings account. And do not take money out of your pension schemes, right? Markets are lower right now. Basically, a lot of pension fund managers, they would invest into lower markets. So tomorrow, if the market starts going up, it will basically increase your pensions. So do not take money out of it. Spend that money over. Okay, thank you for the session. Are we going to get the presentation copy? I can definitely send you the portfolio copy. Let me check if we can. So basically what we discussed is between the two flyers. I'll make sure that that reaches you out. If you don't get it, just talk to your RM and they will send it to you. Right. So once again, guys, thank you so much for giving your time on a Friday. I wish you a lovely weekend, and keep the people who are getting affected because of the Russia-Ukraine conflict. Keep those people in your prayers and your thoughts. They need us at this point, and I hope everything goes well. Until then, be safe and keep yourself invested. We'll have another session next week, and we'll have definitely more and more topics to talk about. My name is Yogesh. Wish you a happy weekend. Have a great day.